So you've probably heard about the S Corporation, and you don't know what it is. You don't know how it's different than your LLC or your sole proprietorship. So let's discuss a little bit about the S Corporation and give you some ideas of what the S Corporation is, how does it compare with the LLC, what are the advantages of having the S Corporation, and how is it going to save you in taxes. You're an LLC. As an LLC, you pay two types of taxes. There's income taxes that everybody pays. I pay income taxes. You pay income taxes. Basically, unless your name is Donald Trump, you're going to pay income taxes. But aside from income taxes, in addition to income taxes, you as a single member LLC, or even if you're part of a partnership, you're going to pay an additional kind of tax called self-employment tax. You may or may not have heard of self-employment tax, but self-employment tax constitutes approximately 15% of your net income from your business. So let's work with some numbers and we'll keep it very simple. Let's say you profit with your business $100,000. You might be a therapist in a mental health therapy practice that you have, private practice, and you're making $115,000 a year and you have $15,000 in expenses. So your net income, which is defined as your income minus your expenses, comes out to $100,000 even. Okay, we'll just keep it simple. So you have $100,000 in income. And of course, as we mentioned, you're going to pay income taxes on that net income. So let's say your tax rate, your income tax rate is 15% federally. Your federal tax is 15%. So that's $15,000. But in addition to that income tax, you're also going to pay what's called self-employment tax. Self-employment tax, as we stated, constitutes approximately 15% of the net income from your business. So if the net income from your business is $100,000, you can expect to pay approximately $15,000 in additional self-employment tax. So now you've got income taxes of $15,000 and you've got self-employment tax of an additional $15,000. So federally, before you even had a chance to sneeze, you're in for $30,000. Of your $100,000 of net income, you're going to be paying $30,000 in federal taxes. And that's aside from what you pay the state, because you have to pay the state income taxes as well. Now, you might be in a state like Florida, a state like Tennessee, a state like Nevada, where you have no state income taxes. But for the most part, most of the states are going to tax you for state income taxes. And if you're in California, if you're in Maryland, if you're in New York, you're going to pay a very high income tax rate. That could be an additional 6, 7, 8% of your income. So now you've got 15% of income taxes, federal. You've got 15% self-employment tax, federal. And you've got another 6, 7, 8% potentially of state income taxes. That's a good 35, 36, 37% of what you made is going to go towards taxes. That's very hefty. Now, for the most part, when it comes to taxes, there's very little you can do. You can try to mitigate your taxes, and we have strategies that we've used with our clients. And for the most part, you're going to be able to help mitigate some of that tax liability, some of that income tax liabilities. Certain strategies that we employ on a year-to-year basis that will help you minimize some of that income tax liability. But what are you going to do about your self-employment tax? So now, that's if you were filing as your regular LLC, or if you have a PLLC, or even if you're not even an LLC, you're not incorporated at all, and you have a sole proprietorship, you're going to pay that self-employment tax. But there is a way out. There is a legal way out of this self-employment tax, this 15% self-employment tax. What is that way out? That is with an S corporation. Basically, you can take your LLC or PLLC or your sole proprietorship and you can transition it over to an S corporation. And the advantage being the S corporation is not subject to self-employment tax. What is self-employment tax? How does this work? Why does the government allow you to get away with this? So let's discuss. Let's get a little bit into this. When you're an employee working for an employer, if you're a W-2 salaried individual, you would notice on your W-2 that aside from the income taxes that you're paying to the federal government, and aside from the income taxes that you're paying to the state government, in addition to that, you're paying Social Security and Medicare. The Social Security tax is taxed at 6.2%, and your Medicare tax is taxed at 1.45%. The combination of the Social Security tax and the Medicare tax equals 7.65%. That's 6.2 of Social Security, 1.45% Medicare, that's 7.65%. As an employee working under your employer, you're going to pay 7.65% of your gross income towards Social Security and Medicare. But what happens if you're self-employed? Now, you are employed by yourself because you are your own company. So you are the company and the company is you. So now, how do you pay that Social Security and Medicare? Well, the government says, not only are you going to pay Social Security of 6.2% and Medicare tax of 1.45% for you as the employee of your own company, but the employer, who is you, because that's your company, is also going to pay 7.65%. Just like when you're working for a company, your employer pays 7.65% of your gross income, and then you pay the other 7.65% of your gross income. So now when you're self-employed and you are your own company and your company is essentially employing you, so now your company has to pay for 7.65%. You have to pay for 7.65%. The combination of the two is now 15.3%. So you're paying about 15% in Social Security and Medicare tax. That is self-employment tax. When we talk about self-employment tax, that's what it is. Self-employment tax equals Social Security and Medicare tax, 6.2% plus 1.45% times 2 for you, the employee, and you, the employer, because again, it's your company. So you're paying on the employer side, you're paying on the employee side, you're getting double hit. So you're getting a self-employment tax of approximately 15%. That's where that comes from. But the S Corporation is not subject to that self-employment tax at all. So the government allows you to transition your sole proprietorship or your LLC into an S Corporation and thereby saving 15%. So that's a very, very hefty savings. Now, there are certain requirements that you have to abide by. There are certain legalities that you have to make sure to stay in compliance with. That, for the most part, is the accountant's job. The accountant's job is to make sure you are in compliance. You're filing the right paperwork for the S Corporation because the S Corporation has to file its own tax return at the end of the year. You don't file your company like you did before as what we call a Schedule C, issuing a profit and loss schedule as part of your 1040. You don't do that anymore. You file an S Corporation tax return. And in the next webinar, we'll discuss exactly from a compliance standpoint what you need to do in order to keep your S Corporation in good standing, doing the right things on an annual basis to make sure that the IRS checks you off and that you are completely in compliance. But for now, the basics are your LLC, if you choose to be taxed as an LLC, you'll pay 15% income taxes, approximately, 15% self-employment tax, and then your state taxes. But as an S Corporation owner, you don't have that. You don't have that self-employment tax. So you can potentially save a big chunk of that $15,000 by sliding over to an S Corporation. So now I would approximate for $100,000 of earnings, you can probably save between $8,000 to $10,000 in self-employment tax. So now instead of paying $35,000 in taxes, you're really cutting it down to about $25,000. That's a pretty significant savings. Of course, the more you make, the more savings you're going to have. So if your income is up to 125, it's up to 150. Again, this is net income. So that's income minus your expenses. So in that case, you're going to save more. if your collective income, net income is $50,000, so then your savings would be minimized. So if you're earning, let's say, only $10,000 or $20,000, because let's say you have a regular day job that pays you a W-2, and then on the side you have clients that you have with your private practice, but you only make, let's say, $1,000 a month with that client. If that's the case, it would generally not be beneficial to use the S corporation. The reason being that because the S corporation does have certain requirements and legalities, you do have to file an S corporation tax return. And as we'll discuss, you do have to put yourself on payroll. And there are potentially other requirements that you have as an S corporation. It might not benefit you if you're making $10,000, $20,000. But if you're making $30,000, $40,000 already, that's already pretty significant. And you can save a good chunk of cash by going over to an S corporation. Next webinar, we're going to discuss exactly to how you can stay in compliance, what you need to do in order to file for the S corporation, in order to legally transition for tax purposes your LLC into an S corporation, and what you need to do on an annual basis to keep that S corporation in compliance with the IRS. It's important to mention that the LLC is different from the S corporation. There are different filings. There are different things that you need to do. And in order to stay in compliance with the S corporation, you need to make sure that you're constantly in compliance with the IRS in order to keep yourself in good standing, to make sure that the IRS continues to allow you to file as an S corporation. So until next time, again, next time we'll discuss the exact things that you need to do in order to stay in compliance. But until next time, we will sign off with this. And if you have any questions, ask away. Otherwise, book an appointment with me, David Leichter. Did you like him? No, you liked her. Go to leichtercpa.com. That's leichtercpa.com. L-E-I-C as in cat, H as in Harry, T as in Tom, E-R, CPA like certified public accountant.com. Book an appointment with us, and we'll be happy to sit down with you to discuss what the advantages are of you going to an S corporation. Thanks a lot. Tune in next time.